We're live. Well, good morning, everybody. Really do appreciate your time, taking some valuable time um, out of your schedule. The webinar here this morning will be recorded. Everybody will be on mute. And then what'll happen is a recording will be played back to everybody here after this. So if you have any questions throughout the webinar, please go ahead and use the chat function, as well as there's a Q&A function. We're going to have some polling questions. And I'd like to just kind of start out is, the problem that Jerry and I have seen is that business owners, we're busy. We're all business owners. We're running, seems like 36 hours a day. And businesses today that plan for exit and succession have a better way of kind of getting out of their business and also letting their business or not having the business owner be, running the business. They can, look outside and everything. And so our goal today is to kind of go through some different unique techniques and explain how, exit and succession planning works, whether you're looking to sell today or a year or 5 years, what are the things to look for? So with that, I'm going to hand it over to Jerry. Jerry Woods is our special guest speaker here this morning. Jerry, do you want to take maybe a minute and kind of tell everybody why you're doing this webinar?
Oh, sure. Well, I appreciate it. Everyone showing up today. This is a topic that's near and dear to my heart. I've been in finance and particularly in banking largely just about 40 years now, but I've really tried to specialize in the transfer of businesses. The transition of business from one owner to the next and financing that business. But I've also been a licensed business broker as well, and have gone through the valuation training for CVA and their testing. And I've also been involved in the exit planning community as well. There's two large national associations of exit planners. It is a growing community of people that, as it's being recognized, that there needs to be a specialist, a quarterback for that. So I've been involved with those organizations here over the last 5+ years and been a speaker and trainer at their conferences. So it's been a lot of fun to see this grow and just come together here in this webinar to just give you a high level, a 30,000 foot view of what needs to be considered. And as you'll see at the end, time is really the issue.
Perfect. So Jerry, one of the things that we've seen is that, business owners have, common characteristics, and we've kind of came up with them. What are your thoughts here with what we've talked about here?
Well, in some 40 years of dealing with entrepreneurs and small business owners, they are a hardy lot, to say the least. And they are very, very committed and wrapped up into their business. Otherwise, they wouldn't be entrepreneurs. They would not be business owners, because it's a life of uncertainty and a life of immersion where they're constantly concerned about their customers and employees, all their vendors, their family, their community, everything. But the one common thread that you'll see, as I, look at, lots of personal financial statements every day, most entrepreneurs, most business owners do not hold many assets outside of their business and their home. You don't see, 7-figure 401ks or any type of retirement planning or savings. All of the dollars go into the business. But the other part of that, the other side of that coin, is their identity is also put into that business. So in considering, the transition of business, we always concentrate on the quantitative portion of it. We also need to concentrate on the qualitative portion. What will life be like after that transition? That's certainly very, very important. And a good business broker will not only consider the quantitative part, although that's very important, but they'll also counsel that business owner of what life will look like as well, and become a trusted advisor from a qualitative standpoint. So the time is really of the essence of it. I always look at the old book, E-Myth, where the author there of the E-Myth talked about that most of the time is of a business owner is working in their business rather than on their business. And time must be spent working on the business to generate a company that has a sustainable cash flow for the future transition.
Yeah, Jerry, you hit it right on the head there. I think it's, we all know that we should be working on our business, and it's hard some days to prioritize that. And a lot of times we just need to kind of get out of the office or just be able to, go to a seminar or something, or sit down with some exit planners, et cetera. So here's kind of an interesting stat is 63% of the current American business market is owned by baby boomers. That's a huge amount right now. Jerry, what are your thoughts with that? I mean, we see, I mean, you're a baby boomer, you're in that age, will the kids take over the business, do you think, a lot, or is a lot of it kind of getting out in the private market?
Of all of the transitions that I finance, very few of them are taken over by family members, by the succeeding generation. Very few of them are. Young people today are looking for something a little bit different than what mom or dad did in this, so that they will strike out on their own. I see more being transitioned to employees or ESOPs to all the employees. All these are available to do. But yeah, I'm right in there, and I'm towards the end of the baby boomers. So we're getting towards the end of that generation. So we're going to see a huge slug of businesses being transitioned here in the next 5 to 10 years.
Well, Jerry, I hit the button too quick here, brings up our first polling question. So what percentages of the businesses that go on the market sell? So if we could have your participation, that would be great. 80%, 20%, 50%, or 15%. We'll give it about another couple seconds here. We've got about, see who's listening and everything. Got about 8-9 people left. So we'll close the polling in 1 second. We'll give another half a second. And we'll end the polling, and we're going to share the results. What percentages? We have 29% said 20%, 53% 50%, 18% said 50%, nobody said 80%. So we're going to kind of go to the next slide in 20%. So we had about 29% of the attendants that had the right answer. And Jerry, I mean, you and I have looked at this number, and it's amazing that only 20%. Why is that?
Well, it was shocking to me the first time I read this number, and it was decades ago. Tom West, who is godfather in the business brokerage business, and wrote the Complete Guide to Business Brokerage, listed that in the opening to his book. And when I read that, I was shocked. How can only 20% ever transition or sell? And what happens to the other 80%? Sadly, what happens to them? But it's all about planning. And even though decades have passed, these numbers really have not changed. In my business, in the banking business, with financing transitions, only 40 to 50% of the financing transition packages that come into a bank are ever approved. So a lot of it is failure to prepare that business to be sustainable. Either it's all tied up into the individual, or that once that business owner leaves, so does the income of the business. It's all predicated upon that business owner being there, and they have not built a sustainable model. So that's the biggest thing that really drives this number down to 20%. And then I see Dave, you put 80 to 90% of their financial assets are located in the business itself. That's the sad part is, as we said earlier, that they don't have a 401k typically, or other savings, everything went into their business. So the trick is that you need to transition that business to unlock those assets and bring it home and let that business be sustainable into the future.
And Jerry, that's why it's critical to start planning today versus waiting, even 6 months, a year, even a week. I mean, in the last year, we've all seen, the world change. I don't think anybody would have predicted, the whole COVID thing. Not even Nostradamus could have predicted that. And he's incredible at predicting. But so we have our second polling question that's going to launch here. So, and this kind of plays right in here. Is your business your retirement? Yes, more than 75%, or no, we have other retirement savings. So we've got about 81 participation, and so we're gonna end the polling here, and then we'll share the results. So 50% have other retirement savings, and then is actually split 50-50. And then that more than 75% of their businesses is up in their retirement. So that's why it's important to everybody plan for their succession, whether it's on your terms or if something premature happens. So Jerry, the problem that we kind of mentioned when we first started here this morning is the failure to exit the business on their terms. There's just a few reasons, and so we're going to kind of go into a couple of them. What are some of the common miscalculations, Jerry?
Well, first and foremost is not knowing the value of the business. People hear what their friends or what their associations say, what the typical multiple is, and they kind of hang on that's what I will receive, and I'll receive that very, very quickly, and end of story. And that's probably the biggest problem. The second issue is unrealistic future growth assumptions. You think that your business is going to continue to grow. Your business is worth $5 million today, and you just think it's going to continue to grow at some type of trend. But we know we're in an uncertain world today. The pandemic has shown that. Changes in tax laws have shown that. Lots of things affect the ultimate net value of the business, and that's what business owners really fail to see if they fail to plan, is that their net proceeds will fall far less than what their needs will be. So they need to address those things early.
And that's a good point. I mean, I see it quite a bit as, a business owner will say, hey, Jerry, I'm going to sell my business in the next 6 months. It's going to be 3 to 7 times EBITDA, but their business really isn't worth that. It's only maybe worth half a times EBITDA. And so one of the other things, selling a business is not like, selling a house. Right now, I mean, it doesn't really matter where you're at, whether you're in Nashville, Tennessee, or Minnesota, or wherever you're at, whatever state, housing market is unbelievable. I mean, you don't even need a realtor, to sell a house, and you'll get $50,000 to $100,000 above closing. Now, I strongly suggest that you use a realtor because they do an incredible amount of things. But so Jerry, with all this, lack of experience in selling a business, what are your thoughts, with a couple of things that we have up here on the screen?
Well, the main thing, just to reiterate, knowing the value of your business, but even before that, you need to work with a good financial advisor, someone that is looking at what your retirement years, if you want to call it that today, but look, I call it refirement, but looking at what does that look like to you, and to your family, to your employees. Start visioning things on a qualitative basis first. Some people want to play golf every day. Some people want to sit on a dock, and some people want to travel the world, whatever, or just some people want to just sit in a chair and read a book. All those have different costs and a value that you need to realize. So working with a good financial advisor and investment advisor somebody that's very experienced in this and is really looking at it with you as a friend more than just looking at the numbers. It's extremely important. So knowing that value, and then second most important thing, what's it worth today? And what I find the vast majority of the time, there is a gap between where we need to be and where we are today. And that's where the exit planner comes in, along with other trusted advisors that need to work in concert with each other to get you to where you want to go. Ultimately, you're going to need to find a buyer. So you're going to need an intermediary to find that buyer. Sometimes it's like we're saying, it's not many times the kids, but it really is somebody inside the business, even a competitor, a friendly competitor, that type of thing. But if it is a third party, you need an intermediary to go out and find the right buyer. All these things take time. So, the time to figure these things out is not when there's a trauma or a crisis, in the owner's life or in the business life. Do it long before that.
Yeah, so Jerry, I mean, you made a good point. One of the key things is to make sure that, you have key employee retention agreements. Also, so if you have a buy-sell or an operating agreement that says that if your business partner is going to buy you out upon a death or disability, the key thing that I see it time in and time out, unfortunately, there usually is no money there. It's a stack of paper that's about 50 pages long. But it's kind of, I shouldn't say this, but it's worthless if there's no money to buy it out. Because typically what businesses think that, hey, they'll just go to the bank and the bank will borrow them, $2 or $3 million when their business partner just died or got disabled and can't work. You as a banker, what would you do with that situation?
Well, there's a lot of things to look at, and it really is first and foremost is the experience, is the succeeding management. Do they have the experience to step into the shoes of the deceased owner, or did that owner, with the death of that owner, did the knowledge and experience die with them? And if it did, and there's no succession plan that's tough to finance from a banking standpoint. And then the other side of it is sustainable cash flow. That's the key. That's the pinnacle of all of this here, is you need to have a sustainable cash flow that succeeds the current ownership.
Yeah, that's very true. One of the ways that businesses can, protect that is to buy a key person life policy or a disability. Gosh forbid something happens. Nobody likes insurance, but it does help in these situations. So Jerry, we're going to go to the next slide, but you had mentioned in the last couple of weeks, what was your statement about if the business can't run without you?
Well, just when I was a licensed business broker, I'd tell my clients, if you cannot go on vacation and refrain from calling in and checking in and everything every day, every hour, you really don't have much to sell. You are so tied to that business that when you leave, so does the value of the business.
Yeah, that's true. We're going to launch our last polling question. And our last polling question is, does your company have a succession plan? Yes, we've started, or no? So Jerry, while we're waiting for the results here, what happens when a bad exit occurs?
Well, lots of things. It's always a surprise, and it's usually some type of traumatic experience, bad health, something happens to the owner. Or, as we've experienced in the last year, without a plan, a pandemic comes along, and the business is not built to be sustainable. So lots of things happening. We're experiencing that in our industry, in the banking industry, where employees are hard to come by, good experienced employees. And during these tough, difficult times, that's when competitors come in and try to take your employees, try to take your customers, try to take your vendors, all of these things, and it pushes, and if the business owner dies unexpectedly without a plan, the value of that business can go from 7x down to a half X very, very quickly.
Yeah, that's very true. I mean, the trying to attract and retain good key people right now is extremely difficult. The other thing that is your risk in the community. So if you don't have a good exit plan, You may be, I mean, your intentions as good as to do all these things, but things do happen. So we're going to share the results here. And so we've got 29% do have a succession plan, and that's incredible. That's actually higher than the average. I think it's 20%. 18% have started, and 53% don't have a succession plan. So, Jerry, do those numbers kind of surprise you on that polling question?
A little bit, and I think that talks to our audience here. Our audience is certainly above average in their planning.
The other, like you mentioned, is the tax bills that are coming. So there's a question that just came in. Let me see if I can read it here. It's from Mark. His question is, are you seeing a lot of businesses selling today versus next year because of the potential tax law changes?
Well, and I can't specifically say whether it's motivated by, we do have that conversation. We always ask, why are you selling? But we are inundated right now with transitions. There's a lot of people that do want to finance or do want to finance the acquisition, buying a business. Subsequently, there's a lot of businesses that are for sale or coming for sale. And I have to think it is, it's predicated by a lot of things. Let's go back to some of the other things we talked about. The number of boomers, baby boomers out there, they've lived through the Great Recession, they've lived through the pandemic. And now if they can get to back to a place where economically it makes sense, they're going to sell very quickly because age is not on their side any longer. And some of these other things are they're feeling the wind in their face right now, and it's time to sell.
Yeah. So Jerry, there's a lot of solutions. So what is the solution? We've got a couple things up here. In your opinion, what is the solution if you own a business? I mean, obviously, we've been talking a lot about exit planning, and it's important to start today so you kind of know where you're going.
I think a lot of it is really it's a change of mindset, and a lot of times we run our businesses to go back to what we said about working in your business rather than on your business. Well, the other challenge is that you need to have a team of people around you that are working in concert. And I know we all want to minimize our taxes. We all want to certainly run our businesses and our financial statements to minimize our taxes to the furthest extent of the law. But sometimes that's the motivation of the CPA, of the tax advisor, which may not be in concert with what your goal is to sell this business in 3 to 5 years. So if you're looking to sell this business in the short term, you may start thinking about it. What you're saving in taxes today may cost you 2, 3, 5 times that amount in ultimate sale and transition proceeds.
And so when we start thinking about how do you execute, or like when plans are, sorry if I could say it, executed properly. So there's several things that happen in the business owner and their employees they can, I don't want to say relax a little bit, but when you have a proper plan, you're not forced to sell it. So Gerald, we've got a few things on here, and we've talked about this. What are your thoughts with the bullet points that we have up here?
Well, of course, I'm biased because of the industry I've been in for 40 years, but making that transition, funding the transition made easier, making that an easier transition in funding is, to me, a key portion of it. Because if you don't if the company is not sustainable in its earnings and you cannot receive financing for it, and I venture to say that most of the ones that don't transition can't get financing, then the seller's forced to carry that note. And all of a sudden, your 20 years of building this business is put in the hands of maybe someone you met, 6 months ago or 3 months ago. And their ability to continue to run that business and forget about pandemics and economic slides or inflation or tax law changes. You are bearing all of the risk if you do not make that transition financeable.
Jerry, you hit a key point. About 10 years ago, one of my clients in Minnesota had sold their company, a trucking company, and had to finance it with the buyer. And 5 years into it, he ended up getting it back because the buyer didn't fulfill it. And I think he was about 70 at that point. So, I mean, it's something you don't want to, you don't want to leave your hands, your financing, your retirement in the hands of somebody else.
So I'm obviously I'm biased because of the business I'm in, but having a bank being able to vet that out and to be able to lend into that and carry that risk so that the business owner can walk out with 80, 90, or 100% of the proceeds of that business, the value of that business on the day of closing, that's key.
So Jerry, that's a really good wisdom. And so these are some of the things, value drivers that I know are near and dear to you. And they all make sense from a big picture. Can you just kind of, describe these just a little bit here? And which one do you think is the most important?
Well, and we could spend a whole webinar on each one of these, but I've talked a lot about the financing of the ultimate transition, but I spend probably just as much time on financing value drivers as I do on the actual transition, because we want to build a business. We want our clients to have a business that is financeable later and at the highest possible value. So these are called value drivers, and this is just a few of them. There are others, and they change from day to day, and they change from industry to industry. But all of these are things that will heighten the value of the business. The economies of scale speaks very highly there, that where you can take a certain number of assets and have a higher return of assets and generate that. Your operating systems, again, if you are the brains of the business, and once you walk out, there's no operating system, that's hard to finance. That's very hard. Technology is expensive today, not only for inventory and account receivable management, but you also have to defend yourself against hackers that are coming after you. It's products and services that you're offering, selling more to the same people heightens the value. A good company run well has access to capital, and your financial performance is heightened. Your value goes up from 2x, 3x to 5x, 7x, those type of things. Skilled employees, retaining them, attracting them, retaining them, training them, so that becomes the heartbeat of the business. Diversified customer base goes without saying. If you're 30%, 40% concentrated, the value of your business is not going to be as high. It is much, much, much lower. How have you done on branding your business? Are you a household name within your industry? And then lastly, geographic expansion. So I work with business owners to finance a lot of these. Sometimes we do roll-ups, what we call today roll-ups, where we buy out competitors, bring them into the business, expand geographically, gain more skilled employees. You can do that very, very quickly by a properly orchestrated roll-up.
So Jerry, a question just came in. Let me find it here. Is from Susan. So the question is, how much time does it take to plan? Jerry, we're all busy. I'm busy. You're busy. Everybody's busy. To get a business owner or an executive to sit down for 30 seconds is a long time. How much time, or what does somebody realistically have to kind of plan for to start their exit plan?
Well, that's a good question, Susan, but it's a difficult one to answer before someone has entered into exit planning, because you have to find out what that gap is. We have to know from your financial advisors where we need to be, and we need to know from our exit planner and our business evaluators, where are we today, and then have a plan to fill that gap. Depending on how wide that gap is, it could be 1 year, 3 years, 10 years. So it really is the discovery period that we need to get into first, before we can design and implement it. And that's best done by a neutral third party that really can carry that torch for you to fill that gap. Can a business owner do that? Yes, but they're, as we've said, they're so busy in their business that a lot of times you need that third party to really carry the torch and fill that gap and be the conductor of the orchestra here. And here, creating your team here. These are all various business advisors. Some of them do offer and can offer exit planning services as well, but many times they do not want to, or they have seasons. Certainly CPAs are more than equipped to do this, but CPAs have extremely busy seasons, and you need to have somebody available to you when you need them, because things may pop up and you may need to sell your business a little bit faster, or questions may need to be answered. But all of these will work in concert, and they have to share your objectives, what your desires are, your family's desires are for it. And the exit planner is probably the best place to quarterback this team.
It's kind of, and that's a good point, is, the exit planner is like the quarterback. It's kind of like you go to your doctor and you need a heart transplant. You're not going to use your primary care doctor. You're going to go to the specialist, the best heart doctor that you can find to do your heart. And again, it's not that the primary doctor probably knows a lot about it, but that's where you need a quarterback that can work with your banker, your CPA, your attorney, and then also your insurance advisor to make sure that the agreements that you have or don't have are done properly. Excuse me. So a couple of things, we appreciate everybody's time today. One of the things that kind of our ask today is follow us on LinkedIn, send us a LinkedIn connection if we're not connected to Jerry or myself, as well as subscribe to our newsletter online and give us a call. And that's one of the key things, is that the telephone still does work really good. Send us a text. Here's our website. You can schedule a call. You can give Jerry a call as well. Jerry, do you have anything to add? I'm kind of going through some of the questions here, and I think we've answered all of them.
Just to reiterate, for all of us that are on the call here that are business owners, I can't say it strong enough. The house is on fire. You need to start this today, especially in these uncertain times. You have the vast majority of your family's net worth and future net worth tied up in an asset that today is, maybe illiquid or doesn't achieve the goals that you've set with your financial advisor. So you need to get started today, but you also need to tie together all the members of this team so they're working on your behalf with your objectives, and everybody understands what your family's desires are. That's where the best transitions happen. That's where they're easily financeable. And when the day comes when that transition happens, you've already rehearsed all this, and it's not a fire drill.
Well, perfect, Jerry. I appreciate your time. Jerry and I both appreciate everybody's time here today. If you have any questions, please give us a call, reach out to us. Our phone numbers are right there. You can send us an email or you can text us as well. Thanks, Jerry, for your time, and have a great day.
All right. Thanks, everyone.